Market was bought yesterday. SPY's 219 passed a couple of times this morning as well. You can see we're starting to grind up. It looks like we're set to, some fun things can happen on a Friday. So we're right here, it's 219.30, triple top, for this down move to 212. So the close above there will probably get people excited. I don't know if you saw the numbers that came out on the flows into the market from last week, ETFs, mutual funds, etc. Numbers were record type numbers. Money's been coming out of, there have been outflows pretty much 90% of the time for the last, pretty much since the financial crisis. But last week, a lot of money went back in, and a large part of that may have been seeing the initial reaction and bounce after the election. People were like, wow, the market's reacting so strongly, we're right back up at the all-time highs. Let's allocate, especially some of the big allocators, some of the institutions. I don't know if much retail people really were piling money in, maybe a little bit, but the institutions saying everyone thought the market was going to tank, everyone bought all these puts, and it's going the other way. Let's pile in, and we saw that especially in the IWM in terms of, I think I talked about this a couple of mornings ago. There's just not as much liquidity in the IWM because these are small caps. So I don't know what the aggregate. Feel free if you want to do this, calculate the aggregate market cap of the Russell 2000, but it's going to be much lower than the S&P 500. And so there's just not a lot of liquidity there, and that's how you get a 13% move in a couple of weeks. So IWM, we're above 130. First we held 128.5, then we held 129, then yesterday we held 130. In the morning we dipped below it a couple of times, but we basically held 130. So this morning we'll watch. We did fail in the morning and in the afternoon at 130.80. I'm long a little bit from 130.20, but I'm happy to flip back to short if we fail up here again. I'm happy to buy into a flush into the 130 area. Okay, the first one is CRM. They beat on EPS. I thought the guidance wasn't particularly impressive, but the market seems to think otherwise right now. So let's take a look kind of where it is from a big picture perspective. So since it topped out at $84 in the spring, it's been as low as, well, it had this one day where it gapped below 70, but pretty much has been supporting in the lows. You know what, this down move was probably to talk about them buying Twitter. I probably bought on this day. So, and the market just did not like, actually you can see it from here, 75, then the next couple of weeks it went all the way down into the 60s. This was the talk, they might buy Twitter. But it's gapping above this downtrend that it formed. It's, gapping into this area right here, but if we look at it on the daily, you can see a lot of potential resistance here. So the first level is this 80.50, which we're below right now. And then above that, I guess it's around 81.50. So initial pop in the after hours took it through 81, came back up and failed above 81 again. And then after it failed there, it started to hold below 80.50. So that's, if it pops on the open, that's kind of what I'm looking at right here. So make another lower high. And you can just use 80 as, did I put that as inflection? No. You can use kind of 80 as an inflection. Pops, fails, starts to hold below 80. The thing about CRM that's kind of cool is when it gets going, it can just have like ridiculous dropouts. So if it does fail and drop out, it wouldn't surprise me if it did something like, since the earnings release came back in, 78, 60 is where it's supported. That would be the first area we would look at, the 79 to 78.65. And then if it made another lower high, you would just look for it to keep on going. So prepared for anything. Obviously, I want to be short at higher prices, and I want to assess when it comes into this initial pop from the earnings, the 78.5 to 79 area. There should be at least 2 or 3 good trades in it today. Okay, A&F. So A&F looked really bad, but let's put this in context where the stock is. The stock is very, very beaten down. In fact, if we look, it failed at 30, then the gap down here on the last earnings below 20, and they sold it off all the way down to $14. So I would assume that a lot of what they reported was priced in just based on that all the way down from 19 to 14 before buying it ahead of earnings. Now, everybody who bought it ahead of earnings is out of the money right now, or at least everybody who bought the last week or so. Okay, so 14.5 is a bottom. 1430 is the on the longer term support. From when it bottomed, it did touch it in the pre-market and bounced from there $1. The same thing I said yesterday, FSLR, I thought I had a good chance of going lower. They bounced at $2.50 before drifting down the rest of the day. So it's similar in that the fundamental's not good here. It's beaten down a lot. So you got to be a little bit careful on the open for a bounce, but eventually the sellers could take over. I use 15 right on the open. Since it bottomed here, it held 15. What you want to see on the short side is it get below this 15 and hold. Now you're going to have the 10% rule, meaning you can't hit the bids to get short because it's down more than 10%. At 15, I believe. It's down 9.6% right now, a little bit above 15. So that's something to keep in mind. If it trades below 15 today, you won't be able to hit the bid to get short. That can kind of distort the way it trades. I'll watch the halves and the whole numbers as well. What did I put for resistance on this? I put 1565 to 16. I guess that's probably based on the longer term. So we'll watch right on the open, see if this pops up into that potential resistance area right here. Another one prepared to trade both sides. Then Gap Store's GPS. I saw some downgrades, but these analysts have been wrong about it for the last $10. They had neutral ratings, sell ratings as it bounced from 18 all the way up to 30. So I take their downgrades a little bit with a grain of salt. Having said that, it just did run up from 26 to 31. So
watching tops to PS, also EGLE looking for pops on the.
So the numbers were in line. The guidance is the same guidance they said before, but the analysts have been raising the numbers above what they had been guiding. So that's, I think, the disappointment there.
Yep, now scale into that.
So the real support is down here, 2740 to 20. This area right here where it was resisting before it gaps to 2780. So if they do flush it down, this is the area you'd look for it to bounce from. In terms of shorting the pop, 30 is the natural number.
Okay, just the rest of the
support the other day where it was accumulated is 2940. Yeah, the initial reaction move was to 2920 in after hours yesterday. So we got to watch 29 actually for pops here. I have some alerts into $29 to see how it behaves there. If it gets up there and flashes above and then starts to hold below again, then look for it to come right back down into this, and then I don't have a strong feeling about it either way. That's why it's third. Applied Materials is an interesting one. If we look back in the last couple of quarters, what started this move was the gap here above 20, above this resistance. It was really good numbers. They ran it up, came back, almost did a retest. Last quarter, good numbers again. So they keep on raising the EPS guidance, but that's based on the fact that things have grown and scaled up, but the revenues are not going up anymore. And actually, they did raise revenue a little bit, just that their backlog came off a few percent. This is one of these large semiconductor equipment makers where it generally trades at a pretty low multiple. So just I was looking at the numbers that they guided, and the multiple's starting to excuse me, get a little bit richer. The daily had topped out at 31, going back to September, oh, my birthday, September 22nd. And let's see. Initial reaction was down. They gave the guidance to pop back up. I would just use 30-50. Kind of see here, it was failing here in the 40s this morning as well. As long as it's below 30-50, you can trade it on the short side based on the initial reaction. Starts to hold above 30-50 and then get above 30-75, which was yesterday's range. Look for that test of the all-time, not the all-time high, the high, the recent highs. And then finally, Tesla I just put on here because they approved the merger. I figured the pop would be shortable. I don't know if it's going to get back up to where it popped in the after hours yesterday, but anywhere 192 or higher seems like a a good spot to be short from. It bounced off of 180. If you look at it over the last couple of weeks, it did have 2 days where it was above 192, but only 2 days. So I would think it could continue to consolidate in this area, low 180s to low 190s. So I'm already offering up there. Hopefully it pops up there again. BBY, this was the number one stock discussed in the game plan yesterday based on the longer term consolidation, the fact that they beat numbers, they raised guidance. It did have a drop right on the open through that 42.80 we discussed in the meeting, got back above and then trended the rest of the day. A little bit blow off toppy-ish at the end, got ahead of itself. $4 move is pretty big in Best Buy. Well, it's double its ATR, which you see on earnings sometimes. Looking at it today, obviously 45 is the obvious support area. And then it broke out in the afternoon about 45.5. So that's something as well. So a flush on the open is probably viable. Just massive accumulation yesterday all day. Looked like maybe it was going to top right in the middle of the day here when the volume spiked at the 45, but then had tight consolidation, broke through and trended up another $1.50. So good example for less experienced traders just looking for something slow with tight consolidations at the high, playing breakouts and things like that. It was clean, very liquid. That's why we discussed it at the top of the meeting yesterday. Certainly you want to review things like this and look for them next quarter during earnings. FSLR, I mentioned earlier in the meeting, this definitely popped more than I would have expected possible. Stopped me out on the short initially, and then I lost track of it. I actually punched it up at 32.25 and tried to short it. So that was the gap fill, soft gap fill. I didn't get a print there immediately or so. Made a lower high, a little bit random at the price though. just looking at it now, it's gapping down. Probably there's some downgrades or something, but it couldn't hold below 31 in the afternoon twice. So I'll watch right on the open to see if it pops into this area here. This support now becomes resistance. Yeah, I think what I said yesterday still goes. I definitely still see it being able to come down to here and eventually work its way to the mid-20s. So I will continue to keep an eye on it on the short side. And then NTAP, this one was very clean based on what we discussed in the morning meeting. 38.80, we talked about long-term resistance as the short. It spiked there right on the open. I was able to get that price. And first move was down. So I'll actually write a blog post about this probably, but something gets to your price where you want to short it, you want to see a down move from there. The next thing you want to see is a lower high, which we got there that was at the after hours high from the prior day. And the next thing you want to do is see it hold below a key level, which we got holding below 38. So it did all three things in the first hour, and so it was a good short the rest of the day. If you didn't catch it for this, you could have shorted the pop back to $38 here. Didn't quite get to where I wanted to cover. I was bidding 36.50s, I think. But did come off $2 from the initial short, and even $1 plus from a 38 entry. So it was good. Yesterday was a good day in terms of identifying prices and potential moves in NTAP and Best Buy. For today, this area where it popped in the afternoon, 37.35. Right here is what I'm looking at. See if that fails, and then I'll do the same thing if here fails and holds below 37, similar to the way it held below 38. I'd be looking for that pattern to repeat itself. So 9:10 right now. I got 20 minutes to prepare for the open. We can continue to watch. Obviously, the firm made a lot of money yesterday short. They finally pulled the rug on the shipping stocks and went down 50 to 90%. There'll probably be some slower, easier trades today if you're following Shark and Swang. We'll probably both be trading them. Be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.